Hi, this is James Shugg at Westpac London with our end-of-day report for Thursday, June the 21st. Apologies for not delivering a report yesterday. I had a clash with an important client event. Although certainly the Federal Reserve's extension of Operation Twist and downward revisions of their forecasts, but failure to put in place actual further balance sheet expansion type of stimulus has had repercussions in today's markets, with Europe in particular opening weaker because of that. And subsequent to that too, a lot of data today hasn't been supportive. In Europe, we had the advance purchasing managers indices for June. The composite index there was steady at 46, which is well below the neutral 50 level. French numbers were actually a little bit higher. German ones were weaker than expected. But look, at 46, I mean, that's lower than at any point the PMI was running in the first two quarters of the recession back in 2008. And we say that corresponds probably to about a 0.6% contraction in GDP. And we've had a detailed look at the revised first quarter GDP numbers, and they actually reveal that the first quarter was 0.0001% weaker than the fourth quarter of last year. Now that was rounded up to flat, and the news reports when the advanced GDP report came out at the time were along the lines of Europe skirts recession or avoids technical recession. But remember, the fourth quarter last year was down 0.3%. We now know that the first quarter of this year was down ever so slightly, and it looks like the second quarter, the current quarter just about to end, is down quite steeply. So you can say that Europe now looks like it's pretty much been in a recession, certainly for 3 quarters, and the recession probably started actually around the middle of the third quarter of last year. So pretty much for the past year, it looks like Europe's been in recession, and that's certainly something that markets are now very much coming to grips with. We also had in the US, the Philadelphia Fed factory survey for June. It was already negative, as it was at -6 in May. It fell to -17 in June, with shipments down, orders down, but actually employment edging up a little bit. That's the weakest reading since a similar drop in that survey around the middle of last year. Nevertheless, adding to the sense that the US economy is losing momentum. Existing home sales fell 1.5% in May. The latest weekly initial jobless claims, which is a measure of layoffs in the US, it fell 2,000 in the latest week, but at 387,000, it's still very much in an uptrend, which began back in the middle of February. So for 4 months now, we've seen that uptrend in claims, and that's been pretty much consistent with the weaker jobs story we've seen in the US in recent months. A few other bits and pieces on the data front, but plenty of other news to report out of Europe. We had an ECB Council member, Benoit Coeur. He said that a rate cut would be on the table at the July ECB Council meeting. He also said, though, that the bailout funds, the EFSF and the ESM, yet to come into operation, should buy the bonds of the problem European sovereigns in the secondary market. Well, that's what we think the ECB should be doing, but nothing like passing the buck for these European bureaucrats. The other news, the Spanish had a bond auction today of medium-term bonds. The 2-year saw yields rise from, I think it was 2.1% to 4.7%. That's compared to the last auction of that maturity back in March. So over 3 months, we've seen yields, the interest rate that Spain has to pay, more than double on that 2-year money. And that's yet another illustration of the disappearing confidence that investors have in the ability of the Spanish government to service its debt and roll over its debt. An independent auditor put an estimate of about up to 62 billion euros on the recapitalisation needs of the Spanish banks. This is a story you're going to hear a lot more about as time goes by. There's reports that Moody's are going to be doing a lot of downgrades of a lot of banks after the US market close later tonight, so watch out for that as well. Other reports are that European finance ministers do plan to discuss allowing Greece more time to meet its budget cutting targets, budget deficit cutting targets. This is in discussions with the IMF. EU finance ministers themselves probably can't agree. We know that Germany still is opposed to that. So lots to muse over there. The UK had retail sales figures which showed a 1.4% jump in May, but they were down more than 2% in April, and shifting weather conditions. May was marvellous, April was horrible, March was mild, and also changed public holiday arrangements, and the upcoming Olympics are going to mean that you're going to get a lot of volatility in the data in the UK. But look, we can envisage a prospect, frankly, given that the Bank of England voted 5-4 against an extension of their quantitative easing or asset purchase program at the June meeting. We learnt that yesterday. We can see the possibility of the Bank of England doing more QE, the Fed doing more QE, perhaps at the August meeting, and even the ECB if they decide to do more. You know, all of those three central banks could start doing it together in the third quarter. But we'll have to wait and see on that. So that's about it in terms of the events today. As I said, markets had started weaker in Europe, and they've continued so, with most of the bias of that news being disappointing. The FTSE in London down 1% today. The French market down 0.4%. The Germans off 0.75%. The Spaniards are down 1/3, and the Italians managed a 0.1% gain today. The Dow, as I speak, is down 0.9%, and the so is the S&P, although the Nasdaq's down 1.2%. That's at the US lunchtime. In commodity markets, we've got gold prices down 2.6%. All commodity prices are down, basically because less prospect of immediate further quantitative easing from the Fed means the dollar doesn't weaken. There's lots more dollars floating around to go into asset markets, commodity markets, and so on. So we've got copper down gold down 2.6% at $1,573 an ounce. Copper's down 2.5% as well. Oil's down 2.3% at $79.50 a barrel. The Aussie, it was at 1.02, actually just $1.02 at lunchtime today. It's now at 1.008, so a 1.2% drop in the Aussie just in the last 6 hours or so. That's about it for today. Yeah, I'll be back same time tomorrow.